It's Saturday, and on Saturday we like to look at those bigger time frames, and last Saturday really helped us out. I mean, if you look into why we're actually coming down from this area, we actually covered it almost perfectly on Saturday before the actual reaction came in the week ahead. So this was actually fantastic, and we were always paying attention to the fact that this could be flagging out to break out. But if this is going to be some kind of trap, we need to watch for if that daily chart is confirming down. And I do have to give some props at the beginning of this video to someone in the chat, No Boost, who just quietly was commenting over and over when we were up at these type of levels, saying the SPY will end up towards 600. And I said, hey, if you break through 605, you go to 602, and then you break through 602, you can go to 600. I think that's a little less probable. And guess what? He was right. So I got to give props to my boy. Congratulations, No Boost. I hope you had a great trade there. But I want to talk about what we were talking about last Saturday. How were we aware of this? And I wanted to show you guys this clip. Check it out. The big hint going into today was actually oil. Oil with the big drop-off. I mean, oil with the big drop-off actually was a good hint that we were going to see some pressure down for the 10-year yield. The other hint was the fact that the dollar never really kept that run going, right? It's been negative for a few days here, and the 10-year yield and the dollar have been tracking in tandem for the most part, very correlated. So as the dollar dropped off and wasn't really trying to go make new highs up in here, we noticed that the 10-year yield was able to fall. Now, is this a big deal? Yes, it is, because you were 1 day away from confirming this to the upside. Okay, so that's bad, because that would have said, hey, we're going to fight inflation. But I think what is starting to leak into people's brains right now is the fact that we might not need to worry about inflation. We might want to worry about the economic downturn, the slowing down in growth, and the potential for recession coming around the corner. That is what I'm seeing with the 10-year yield and how the dollar is behaving at this moment. But it can lead to a very short-term squeeze for the time being. So now you see how we were aware by just looking at charts of what was overall going on, right? We can't overall be 100% sure, but we can really raise those warning signs and be like, okay, this is turning down. Why would this turn down in this area? And now you see the Dow dropped 700 points for worst day of 2025 so far on the new fears about economic growth. And that's exactly what we were talking about last Saturday with that reaction in the 10-year yield. We were saying this looks like people preparing for the economic slowdown or even economic weakness, and that is what we were paying attention to and relating that to, hey, watch out if we see a daily confirmation. And guess what? You got a strong daily confirmation. We are going to go into the shorter time frames on Sunday, but it's time to look at those bigger time frames, click around and look at some other stuff, see what we can figure out in these areas. Let's get into it. So is this really that bad? And we are going to go into some other stocks as well and talk about what they're doing and really discuss that, because now that we've had a few stocks fail those downward moves, a lot of them might need V-shapes in order to recover from here, and that's not what you really want to see as an actual trader, in my opinion. You want to see structure, not just, oh, the market's going to get saved because of some good news right after we get some bad news, right? That happens plenty of times, but there were a few other things in this area that we were aware of that I wanted to talk about. Obviously, we noticed that the confirmation of the MACD has happened. So we have confirmed both the divergence on the MACD and RSI, and you even held that divergence right here on the RSI between these 2 points. It is actually a really good setup, and that's why it really seems like maybe this thing catches those little 30-minute bounces, but this seems like a thing that will continue. And the other thing that we have to look at, and something that we pay attention to on this channel, is the volatility index, is the VIX really showing us almost the opposite thing, but also the same thing at the same time for the SPY, right? If the SPY is crossing down, we want to see if volatility has crossed up on the daily chart, and there you go. And this is the signal that I told people. I'm like, this is what you need to be watching out for, because this is what can cause some kind of correction. This is what can cause some kind of stock market crash, and this is what you are going to see as we break through that resistance. We even got that retest. Man, this has been a really fun couple of days in the market, in my opinion. And we do notice, just to show it off real quick, we're going to go more into the shorter time frames on Sunday, so make sure you're subscribed, but we do not have any reversal signals even from a 30-minute. So something that you need to be aware of when paying attention to the SPY here on the daily chart, even looking at shorter time frames. But what you want to pay attention to is the VIX does not have any reversal signals to go down. And if we quickly look at the 30-minute on the SPY does not have any reversal signals to go up. So we can catch a bounce from this level. Now, why is that? Well, if we're looking at a daily chart and we just look at the SPY, we see this almost left shoulder. And we see this base that's kind of down here. And look where price action is getting to. So if we actually see some kind of 30-minute or even 2-hour bounce that takes you up for a bit, maybe we run into a daily expected move one day and then that comes back down. And then you will see lower prices, right? This is where things start to possibly go into negative trends. And if you get this to happen, it is pretty sure set that you are going to break through this channel. And we're probably going to go fill this gap down here at 581.97. And we do have a monthly expected move if things get really ugly next week for an area where you could bounce from. So I highly encourage having these yellow lines on your chart for next week. And then we're going to get you those updated weekly expected moves, which remember, we were paying attention to something crazy this week. I mean, I could pull up 3 different clips from last Saturday's video, and we were talking about the fact that this range is really small, right? For this week, it was really, really small compared to the previous ones. Only a 32% chance to land out here, right? 68% zone. But when these are really, really small, it's kind of like that daily that was really small. When these are really small and something unexpected happens, these are the days you really want to be watching out. And wow, what a day to watch out on Friday. So as of right now, you do have the confirmation. This means that the most probable thing is we have more downside until we see if we can cross back up before this daily can go negative. And that's what we'll be watching over the next few weeks. Before we get into some other charts, I just wanted to go over some other things that I'm seeing that could be adding some more pressures to the overall market right now, and that would be the JPY. The JPY is seeing that curl up, and this is because of the inflation rate. The inflation rate for Japan actually came out a couple days ago, and I said to you, I go, hey, look at this. This is the JPY. We need to be paying attention to this as well because this actually can affect the market. Why? Because of the yen carry trade. The yen carry trade just really simply is where, 0% rates to borrow over in this currency, while our currency obviously would be like 7% to borrow our currency. So you go grab this currency, turn it into this, and then you use it to buy things in the stock market. And as this happens, where the JPY gains strength and Japan starts to go through inflationary periods here, we can see increases in the rate, which will cause those variable rates with those yen carry borrows to really start to have to pay to borrow that money, right? 0%. We all would take a 0% APR if you're like, hey, can I? And the way we phrased it in the live chat was this. If I offered you $100,000 at a 7% rate for a loan, would you take it? But if on the other hand, I'm offering you $100,000 at a 0% loan, or a 0% interest, which one would you take? You would take the 0% one, and that is why the yen most likely will see some kind of upward move, because all of this was transferred during those times into USD, and now we're actually seeing the dollar start to drop off in these areas, which could be the signal of that unwinding. Now, the dollar doesn't necessarily, if we're going to continue in the downward direction, we were paying attention to something from the dollar, right? We were paying attention to the fact that, yes, the dollar can go down with the market at first, but you really want to watch out for when that thing actually turns back up, because that can mean some big selling. So I will go into the shorter time frame here to show this off, because I think we're going to look at it twice this weekend, just because I believe this is very important. This is another thing we were paying attention to. Everyone was talking about how the dollar is collapsing, and we were some of the only people being like, yes, this is a flag, it most likely will collapse again. But around our 106.49, right, that white line that we keep there, we want to see if a 4-hour divergence pops up and confirms. And we do notice that that actually was confirming at the end of the day on towards the end of the day on Friday. So this is going to be a worrisome time. If the dollar continues this and takes back the 5 and actually says, yes, I'm going to take back the 5, I'm going to cross up this daily chart, I'm going to get a reaction here, yeah, we might see a lower high because of the positioning of the MACD. But if the dollar is going up, assets and stocks might head down. So we might want to go look at those tech stocks over at the Qs. Something to notice about the Qs. One, same things, right? Smaller zones, which adds into if you get bad news or good news, you could have seen a big uproar, but bad news was the likely thing with the signals that we had. We see that people are paying attention to the economic downturn now, which is exactly what we were pointing out on Saturday. It's so cool. And tech stocks are in a worrisome spot. Now, tech stocks are in a worse spot, in my opinion, because the divergences on the weekly scale are much, much worse for the Qs. If you want to, you can go pull up the SPY and put it next to the Qs on a weekly chart, and the SPY will have a look like this, but it's RSI right here. This RSI is starting to look extremely weak for the Qs on the weekly scale. We could be at a major top right now, but we're always looking out for those traps. So on the daily scale, we notice that that has not confirmed yet for the Qs. So we do have a confirmation from the SPY. We don't have the confirmation from the Qs, but you do have the confirmation about 66% of the way there, right? We do see the price action confirming below the 5, below the 9, and closing at the low, which means this is very likely to most likely continue, maybe down to a price point of about 522, and then we'll see that left head, right shoulder start to pop up. And if this does happen and we don't V-shape or something like that, ooh, this would be a great way for the Qs to fall down. But we need to see that confirmation on the MACD to be 100% sure that we should be paying attention to downside at this point. But a big sell day like this really makes you go, okay, I need to be paying attention to downside. And something we were saying during the live show was, yes, the Qs have this divergence, but they did just break out of some sort of consolidation. Very wonky, but it did just break out. So let's pay attention if it's going to go to the upside. But something on Friday that I kept saying is, in this environment, with the signals I'm seeing, with the possibilities of an economic downturn based on what the 10-year yield is doing and the dollar starting to catch some ground, we were saying I would rather be wrong about this, right? I would rather be wrong about this, meaning I'm going to take that short play because I would rather be wrong if this turned in the upward direction. Why is that? Well, because if you pay attention to these yellow lines, you say, okay, if I'm wrong about upside, most likely something like this is what we're doing, right? 544.72. Most likely I'll see a tag of that. I can manage a trade in here and it's fine. But I don't want to be wrong about downside. I don't want to be overly bullish for sure, because if I'm wrong about downside, that thing by the next week can end up down towards $500. And that's where you really see the difference between the upside, the so-and-so, if you want to call it a reward, if I was going to take a call here, well, the risk was much bigger, and that is why I would rather be wrong about upside than down. That is why I was thinking a downside move was the actual play. And we actually were right about that because we were paying attention to the right things. Just to clear it up for you real quick on the Qs, and we're going to actually do something different this video and check out the NQ and the ES just to show you guys something. But this is divergence now. Just so you are aware, the Qs formed a divergence. This is slightly leaning me towards a correction at this point, but I want to be aware if this really starts to pick up, right? People are just pricing in the downturn, but we still, I think, are yet to see that moment of actual euphoria that, hey, these yields are going to go down, the Fed is going to cut this and this and this. So I think we still need to be aware of a situation where people celebrate the positivity of, hey, yeah, yields are dropping, right? They're going to get caught in that kind of trap, which is actually an okay thing for us because we are aware that the market will top most of the time on good news. We need them to possibly celebrate that 10-year yield coming down, go make another topping signal later on after we correct, and then we can actually see that market top right as everyone is bullish. There is something with the ES and the NQ I wanted to talk about. First of all, the potential for triple divergence here with almost a direct triple top. Very, very huge there, and you're actually seeing that. And I'm going to call it triple divergence because we got a few turndowns here, and then we were able to hold that the whole time on the RSI as well. So this is extreme weakness for the ES. And the interesting thing about this is you notice that we actually were making slightly, just ever so slightly higher highs here for the ES, while actually on the NQ, we weren't able to do that. So you're actually seeing a little divergence between the two right now, which is very, very interesting. You notice that from the actual high point, it's actually down compared to the Qs, which could be another weakness signals for the NASDAQ E-mini futures, right? So if this is going to cross down, which this one on the NQ looks even worse to me actually, but I think a reaction down to these levels to really give us that right shoulder that gives people the euphoric, right? This is where we want to see if it's coming back, or if we're actually going, okay, yeah, people are going to get really excited thinking this is a bottom, then we just reject and turn to the downside. And that's how you start that negative trend. And then you look to break this low. If you break this low, I think it's pretty sure set that we are going to have some sort of correction right here, right now in 2025. When we look into individual stocks, we really want to be paying attention to if daily charts are crossing. Even Apple is really close to that center line and could end up taking out this low. Now, this is up higher, so we're going to have to go into the shorter time frames for that. But I just want to click through a lot of these stocks pretty quickly. That way you can have your Saturday. I want you guys to enjoy your time, not looking at charts all day. I really wanted to just click through and look how these daily charts are shaping up right now. And then we can look at the shorter time frames on Sunday and really try to tackle this thing head on as we calculate those weekly expected moves, put them up on Patreon. Well, for Tesla, remember what we're still paying attention to. Well, can Tesla catch some ground down here at the lows with that divergence point to turn up this MACD? I mean, look at this MACD right now. You can even see if that would dip down and catch some kind of bounce. We actually would see that little divergence on the RSI, which tells you, hey, go into that 2-hour time frame. And so that's what we're going to do tomorrow for Tesla, is look at that 2-hour time frame. And then I also have my weekly expected move. So if I want to trade Tesla, I can make a plan for that going into early next week. If we have a weekly expected move down at these levels and we quickly get there and then we see that thing bounce, hey, that could be a 2-hour divergence that actually shapes up a bottom for Tesla, because Tesla's been weak for a little while now. And we're in an area where Tesla would really want to bounce from, because if you start to lose this block, Tesla's most likely heading lower. Tesla could even break through this channel and end up going to fill this gap in due time. So you want to be very, very careful about these things, but you also want to be paying attention to weekly expected moves. As volatility increases, all you guys who took the course and did the New Year, New Me sale, you guys might want to review that course again, because now is when it's game time, right? As volatility picks up, these plays start to shape up, people get really confused, but if you have weekly expected moves and the skills to trade around them, holy crap, you will just love this kind of market if we get some volatility to stick for a while. So Tesla, we're seeing if this thing can curl up and hold those reversal signals. Don't be too bearish yet. Amazon is going down to the level that we really wanted it to, right around that 213.52 for the actual fill of this gap, and I think we're going to get there. But as you look at Amazon, you're going, okay, this thing is just really teetering down, and you might need some kind of bounce to get some structure to head lower, right? We do get bounces where people try to catch and call a bottom, and then if that's going to fail, well, then we're going to see those things cross back down. So something I would be watching is right where you're at right now, because you really weren't able to solidly close below this low, in my opinion. So I'd be looking for, if we get some kind of counter move here, just barely, right? And then maybe we cross down to hit that 213.52. Then we'll look for if we carve out some kind of right shoulder in this daily head and shoulders. So don't think that we can't get a reaction up just because we saw some selling when stocks like Amazon are looking like this. If this is going to just completely wipe out and be like a crash moment, I assume we're going to see some gap downs here in the market on Monday, because people love, or at least Wall Street loves, to set a trap for the weekend. So you got to be careful in this environment. But as we look at something like Nvidia, we were talking about the fact that, hey, we might go make that little 30-minute divergence first. We actually just tried to and failed immediately, and we turned back down. Now, this is worse for Nvidia, in my opinion. You are actually seeing that if you really blow this up, your signal line is still negative. So if this were to see weakness right now, that signal line most likely does not go positive, and that means that we really need to be aware of if this low is being tested or taken out. And where can we look at from there? Well, we found this important tight zone. So if we're going to head lower dramatically, I'll really pay attention to this zone, see if we get a wick in there or something like that, and see if daily divergence pops up before the earnings, right? We still have Nvidia earnings, and I think people are forgetting about that, and this is something that people will seriously be paying attention to. So even in this area, we might be talking about higher lows, right? We might be talking about higher lows on that shorter time frame, so make sure you are subscribed. Meta is just falling off a cliff. Now, we were saying this because we were starting to approach that monthly expected move, right? We start talking about it in here, but we go, if this thing's squeezing, then it's probably going to a monthly expected move. That monthly expected move was right above here. It was actually right in that area, and we're going to update these after this week's price action. So it's a great time to join the Patreon this week. We'll be talking about that on the live show if you have questions. But we were talking about this for a while, just going, this is the worst time to invest. This is the worst time to invest. This is the worst time to invest in Meta, is what we kept saying for the last week and a half. We were just like, this is not something I want to buy into and say, oh yeah, I want to hold on to this for 12 to 24 months. No, this is probably, right? We kept saying this is going to vomit down to something like 675, down to something like 631, down to something like that 617.82, right? And then this is where we need to pay attention to the MACD and understand what is going on with this market right now. Meta might be a great hint if this is able to maybe see some more weakness, but then able to hold up a little bit better and turn back to the upside. And thank you so much for subscribing, whoever just did. And then we could see some kind of way to head higher. Now, the reason I'm thinking about that is because there is no reversal signal for this MACD at this moment. So if we see that curl down, even if it's aggressive, and then it's able to curl back up, we will be paying attention because this is overall still in positive territory. It saw just a monstrous move. So a big pullback can come, but we want to pay attention. This is still in a positive trend. If it starts to go negative, we'll be more worried, but I think we should be looking for still in this environment for people to get euphoric. And if that doesn't happen, then we're just going to keep going down. But if it does, you're probably going to see a daily MACD curl up in the next 2 weeks for Meta. And Meta might be one of the ones to hold up a little bit better because we were worried about this, and we did mention this as well. We have some stocks showing reversal signals like they want to go down. We have some stocks showing reversal signals like they want to go up, but let's pay attention to which one actually confirms down and see if the ones that are showing reversal signals like Microsoft actually fail. And that was a complete failure. You're closing at the low of the day. The selling just did not stop, but you are still above these levels here. So we're going to take it with a grain of salt, but just notice you're not even oversold in these areas. So we can easily end up down towards 393.20 sometime, maybe in early March, right? We'll pay attention to that. But what we should be doing for Microsoft is pulling over this zone. This zone has been very important, and this is most likely where we are headed for Microsoft at this point. But I just wanted to show off one of those stocks with great reversal signals, saw a great reaction, great trade, but you got to be aware that we were saying if you wanted to go higher, this is most likely where you want to consolidate. And then instead of consolidating, you just get a big wipeout. So we'll see if the bulls can step in right away. But as we're closing at the low, this can continue. So I'll be paying attention to that 393.20 down there for Microsoft. Google as well. Google, we were like, hey, look, if this thing turns down to 182.59, hey, guess what? We lost 182.59, which tells me maybe I need to be paying attention to this gap. I'll still be looking at the shorter time frames if we catch that bounce. But for now, I'm really watching this gap for Google, and we can see how the stocks that were really showing those reversal signals to the upside, we were saying be aware if those fail and then those stocks up high start to fall. Well, that's exactly what took place on Friday, and that is why we need to pay attention to if this is going to continue and fill that gap for Google. It's time to talk about AMC. Now, we will be going into the shorter time frames, updating that purple line for you, but this is great for AMC. Make sure to come back to the shorter time frames on Sunday because we were talking about that reaction to this level. If we're going to see that positivity and not just take off, but we're going to run into a wall somewhere, well, this would be where we want to make structure. So the shorter time frames will be important here to see if we can make that right shoulder and this overall head and shoulders in this area. So one thing that I will be aware of if this is not going to make that right shoulder, and we're going to drop down further, is look for those closings below the 9, which you already have one. You have not crossed over on the RSI, so I'm not too worried about this at this moment, right? But the price action is technically closing below the 9. And you look at this MACD and it's a very wavy. This could mean with earnings, right? We're going to talk about that in a second, but with earnings, we could drop off and create some divergence point, right? We could do something like this, and this would be the signal of go time. I genuinely believe that this would be the signal where everyone gives up on AMC after it sees a downturn on earnings, and then we actually see this thing start to rip. A daily divergence is exactly what you saw at the previous time that this actually went to hundreds of dollars. So a daily divergence is exactly what I want to see in order for AMC to see a crazy move. So if AMC shows a divergence, I will potentially be taking an option play if that's able to confirm down at these lows, or if we have a hint in here, that would be nice on the 2-hour chart. So for the time being, for AMC, we need to be aware that this E is on the screen. Why do I always bring up when earnings is coming up for AMC and GME? It's because this has potentially the short seller problem in it. So if this has a short seller problem in it, wouldn't they be paying attention to very obvious news? So I'm going to look at the data from the options to see if they are pricing in some crazy moves for AMC, but just know that they are aware of this. And usually on these earnings week, you can see some kind of spike, but it usually ends up in that downward direction because they are usually prepared with big money to suppress the stock. And that's just how it goes, right? They can produce even good numbers. We've seen good numbers come out from AMC, and it still ends up in that downward direction at the end of it all. So just pay attention to that. If this time's going to be different, then we need to hold up in this area and create that left head and right shoulder. For GME, this is a big deal as well, but you see how this is not necessarily the best buying pressure at this moment. But thank you to our weekly expected expected moves, right? We were paying attention to if that little 30-minute signal here was going to take us back above the 5, then we react back down, and guess what? We curl up and we hit what? Our weekly expected move. This is the purple line is where the fight really begins. So we will be changing this for you. These change every single week. So we will have that up on Sunday for you. But the daily chart as it stands right now, very negative, not showing a lot of positivity. Some good little buys came in this week, and most likely there's a lot of dark pool buys, right? They seem to route every buy to the dark pool, at least most of them, or off exchange, and the lit exchange most of the time is seeing those sells come in. Even if there's a buy on the dark pool, they're kind of routing it. So you have to be aware that this thing can cross down, but eventually the buyers could step up and win here. And we are already trying to make something. It's just a very deep right shoulder at this point. But if we start to violate this level, I'm going to look for, if we're actually making that divergence point, filling a gap and then making that reversal signal. And wouldn't that be great for GME and AMC to make the same reversal signal at the same time? I would seriously be paying attention to GME if it makes some kind of daily divergence. I would be paying attention to GME even if it doesn't make a divergence, but AMC does, because one of them might be a hint that something big is about to take place for these bad boys. Last thing I wanted to talk about was GLD or gold, right? Now, gold still has that opportunity in the futures to get to something like 3,000. That would mean that overall GLD might go to something like, 274, 275. So we'll pay attention to that. But right now you have major weakness signals on the shorter timeframes that say you need that daily pullback. And you look at this daily MACD, you're seeing that little divergence on the RSI, which tells you, hey, that 2-hour divergence is there. We'll look at this on Sunday as well. But for now, I'm going to make a weekly expected move because I think it's very, very likely that we're going to see GLD take some kind of pullback down to 265.50. And as this is up high, you have to be aware that this can see a moment almost like Meta or Meta, Palantir, anything like that. And we can end up going to extremely lower levels pretty quickly here. We could easily go to 260. We could easily go fill this gap at 253. So GLD might be going through, and gold itself might be going through some kind of pullback season. And I just wanted you to be aware of that on the bigger time frames, right? We're looking at those shorter time frames to find the trade setup, but what's the actual plan with this? The plan with this is gold most likely will end in the upward direction. So something interesting would be if we leave 3,000 behind, we see that big pullback, everyone gets bearish on it, then we see that extended move to get up towards 3,000 again. I think that would be interesting, and then we have that $3,000 sell for the futures market. So I'd be really paying attention to that, but the overall plan with this is, hey, this is very likely to continue. You are extremely positive, so look for that bigger pullback maybe, but that can turn to the upside one more time, and then we will look for those reversal signals up towards 3,000 in the futures market, and we will make sure to pull that up during the live show and maybe look at that further in the futures. That way we can clear it up. So for this video, I think it was just very important to show, hey, we were paying attention to the right things. We should appreciate our work for the time being and just say, okay, what do we need to be aware of? Well, we need to be aware of if there is some kind of downward trap, right? We want to see if things are curling back up. We want to take into consideration our weekly expected moves as well. And we want to look at those shorter timeframes to see what could happen going into the week ahead. So now that we can get all that data tomorrow, we'll talk about that tomorrow. We'll start to formulate plans, and we'll look at what could be the most probable thing going into this week. And that's going to be huge for us. So make sure to join us tomorrow for that video where we're going to give you those updated levels, because those levels really did help us out, not necessarily with the prices, right? But the fact that we were critically thinking, we were really critically thinking about this and going, hey, if this is such a small range on these dailies, we are open to bad things happening or extremely good things, but bad things did happen. And that's where we were aware that an unexpected thing is more likely to happen when you have a really, really tight range, because one little unexpected thing can send you through that daily expected move, and then it just piles on. And that's exactly what happened on Friday. The only thing that is holding it up is we are at 600, which is my bear bull control line on the daily, and we did not confirm below that. So this is where, if we're able to hold up, it would be a great thing. I think the most probable thing is we are heading a little bit lower, and then we'll look for those reversal signals if there is some kind of trap. Thank you so much for watching this video. I really do appreciate it. I appreciate the fact that you guys are tuning in every single Saturday when the market's not even open, showing that dedication to the community, but also to yourself by continuing to review these charts. Even on a day where the market is not open, we can really advance ourselves as traders. So now we've looked into a lot of things, we can formulate those plans, and maybe tomorrow's video with those daily and weekly expected moves will really help us solidify those plans going into Monday. So thank you so much for being a part of this community. Thank you for liking, subscribing, and doing all that great stuff. I wish you guys nothing but luck with your trades, and I will see you guys tomorrow with some updated weekly expected moves. Peace out.